Sterling is a longtime commodity analyst, commodity broker, trader extraordinaire. Let's go ahead and bring in Sterling into the conversation, folks.
And good morning, Jim. And I'd like to guarantee to everybody out there, I am not a bot. I am, in fact, a carbon-based being.
And that's exactly what a bot would tell you. They would say, listen, I'm carbon-based, right? So I'm highly suspect here.
We'll just have to see how my algorithms are, in fact, running today.
Well, where do you want to start?
Well, let's go ahead and start with corn, and then we'll kind of go from there. The corn market and the soybean market are diverging here. So if we take a look at the July corn futures, as you can see, we had our nice little run up. What are we looking at here? Is this a daily chart? This is a daily chart.
Yep.
And as you can see, you've got the big gap. We moved higher off of the report, and we have since started to back away a little bit. We just started planting this crop right now. Corn is 10% planted, or 11%, which is a little bit better than normal. Same story for soybeans. They're about 7% planted. These ideas that we may see some more corn acreage come in are beginning to take hold. It's not enough to change the balance sheet materially, but it's enough to change market sentiment. And the funds, while they didn't get a big net long in place, the funds have been backing away from this. One thing I'd like to caution any bulls in corn about, the dollar index is deeply oversold. A lot of this rally that we got in the corn market had nothing to do with the price of corn. It had to do with the value of the dollar. And as we know, when a currency gets, deeply oversold, it can bounce like a spring. And that could make life a little bit rugged on a corn market that does look a little bit overextended here.
Okay, so in what report were you referring to, just to refresh everyone's mind?
Oh, that was the WASDE when we were on the 11th.
Okay. So right now, we're just sitting on that 8 EMA kind of comfortably. I kept your stochastics on the screen here as well. We're still kind of tangled in love between the percent K and D. So right at 80, actually 79.12.
Yeah, we could get a little spot here where we could get, a little bearishness could bring a sell signal, especially if we finish, in the lower third of the range today. We move in tomorrow and see a little bit more weakness. We could get a pretty strong sell signal, but what we're going to need to drive that, I think, would be a bounce in the dollar.
Got it. Makes total sense. All right, let's move on. What's the next one?
Oh, let's look at the soybeans real quick here. The soybeans are diverging from corn a little bit. And as we can see, the soybeans are moving higher. Couple things driving this. One, the news flow, which I'm sure is driving everyone slowly insane or quickly insane, depending on how well inoculated you are to insanity. Ideas that maybe we're going to back away some of these issues with China. These are just ideas. There is no concrete policy here. But some of that, I think, is allowing for a little bit of upside action in the soybeans. Along with that, this idea that maybe our bean acres are going to back in a little bit in favor of corn. Now, while if we increase corn acres and decrease soybean acres, the soybean balance sheet is a lot more sensitive than the corn one. So we add a little bit of corn to the balance sheet. It doesn't matter that much. We take a little bit away from the soybeans. It does matter. So that in turn, I think, is working to give the soybeans a little bit of a lift. We do have some weather issues. It's dry out here, but we're going to get a little bit of rain. Central U.S. has gotten too much rain, so we may see a few planting delays there. And again, it's very early in that game. We'll have a much better idea in a couple of weeks about how that's all going to work out.
So, hey, Sterling, once crops are planted, could there be a scenario where there's too much rain and it'll affect the crops?
You could get a situation where if you have, intense rain where fields get flooded out, if you get flooded out before emergence and you can't get it replanted, that would be another scenario where, you're farmer, you get your seed in, you get it all planted, and the next day you get 9 inches of rain. Well, all your seed's going to end up in the drainage ditch. So, that is possibilities. Once corn gets to, thigh high, soybeans get to about knee high, as long as you don't get some really tremendous flooding, most of the crops handle that rain pretty well.
No, that makes sense. It is amazing, though, how just about everything is affected by this tariff talk.
The tariff talk, it's basically grabbing the entire economic system by the shirt and shaking it. Trade, we are an interdependent planet, and that is a good thing. We need to have trade because when you have trade, that generally keeps the peace. You don't want to kill your best customer. The other guy doesn't want to kill his supplier. So everything is so intertwined here. That's the first problem. The second problem is we have no policy template. We have no policy clarity. So that creates a situation where these hypersensitive markets, especially when we talk about the S&P, where we have these intraday options, short-term options, everything else just creates this flame of volatility.
Yeah. Well, that's an understatement, saying we don't have clarity. Let's check out wheat. July's the front month, right? I got July up.
Yeah. July wheat, and wheat it'll often trades in sympathy with corn. Not that the two are substitutes. You really don't feed wheat. This wheat is, Chicago wheat, which is the lowest of the three grades. We are seeing it back off a little bit here in a pattern that's not too dissimilar from corn. We will be looking, at winter wheat conditions as we're fully emerged now. And the conditions actually look pretty good for that. So that's a higher quality wheat. That would be the Kansas City wheat. So right now, no problems in the land of wheat.
Got it. I just see a little bit of a cross under on the stochastic, so I was wondering if that's just a function of, a little bit of price action, or is that ominous?
It's a little function of price action, and it could be a little ominous. But again, folks, we are in a period of extreme volatility. So when you measure your trend lines, you can think about the very sharpest pencil you have. I want you to reach into your toolkit, and I want you to pull out the magic marker, okay, and turn it to the wide setting, because things are going to get a little sloppy in here. As you can see, this chart's a beautiful example, actually. You can see we traded up, and if you had made your support line really narrow, oh, we're up above, we need to buy, and it wouldn't have worked. The same with the resistance line up top. Use these wider ideas about support and resistance simply because we have markets that are going to spill over on either side because we are sloshing the truck all over the place, even for wheat, which isn't really that big of a tariff issue.
All right, what else is on your radar screen?
Well, you want to talk about big stuff? You want to go to the S&P, or we want to save that for later here?
No, we can go to the big stuff. I mean, we're only up, 2.47% today.
Okay. All right. Hey, you got your bar right where I have mine, and you made it nice and wide, just like mine. That top bar, that resistance bar that you have up there, that matters. That is an area that has attracted selling. Market behavior, while I know there's a sense of enthusiasm because we've managed to string 2 big winning days in a row, none of this action is normal. None of this price action is healthy. Markets that are healthy do not go up like this. Markets that are healthy do not go around and around in circles like this. So what we have here is a very news-driven pattern to remind everyone that gaps get filled. And I thought this opening and the behavior when I saw last night, I thought it was preposterous. Yes, Tesla did not collapse. I'm not sure that Elon Musk can fix what has been done to Tesla. Tesla's main buyers are more likely to vote for Joe Biden than they are to buy a Tesla truck and drive an F-150. He may very well have permanently damaged a big chunk of his client base, and these people, they will bear a grudge, especially when it comes to buying a car, and they may not come back. So if Tesla does see these problems continue and can't somehow change their image, they're going to have a specific problem with those automobiles.
Yeah, I mean, there's definitely some brand name damage that's happened. However, in my experience over the last 20 years, every single time someone discounted Elon Musk from doing something, he turns around and does something. And I expect more innovation here in the future with these autonomous cars, these self-driving cars. Me and my brother went to lunch downtown Charleston, had a couple cocktails, realized, we probably shouldn't drive home, put the car on autopilot. It took us from the garage downtown to my front lawn, and we didn't have to touch the steering wheel, the accelerator, the brake. It was the most amazing thing I've ever been a part of. It was wonderful.
I agree. Technological innovation. So what we have here is the unstoppable force about to collide with the immovable object with Tesla. I had a sociology professor tell me that the human political mind is formed before the age of 10, and it is one of the most emotional components in a human in the way they think. And that is the force that Musk is going to run up against. Has he so enraged his potential client base that they, no matter what, are not going to buy this automobile? Because yes, he will innovate it, but I can guarantee you Mercedes-Benz, BMW, Chevy, Hyundai will also be innovating right along with it, because remember, cars are monkey see, monkey do, and they all basically look and drive alike with the differences. So that is going to be the challenge that Musk is going to have, and that is going to be one of the challenges I think that Tesla stock has. So, but getting back to what we have today, I would be very wary of this market if we give back today's gains. I would be very wary because it looks like right now, this is a daily chart. How much are we up now? What's the last on the S&P?
So 116 handles, so about 2.18%.
Up 116. So again, that 5,500 area right where that bar is, that is a problem. Now, what we're seeing here is we've heard of the noon balloon. That's what bear markets have. And the noon swoon is what bull markets have. And we're almost to noon, but I'm very leery of this. I think we may have overstayed our welcome on the upside. And if we reverse this, that's going to be the first stage of what could be a 4-day selling pattern that sets up that could be tremendously bearish.
I haven't heard noon balloon in I don't know how many decades, but
The noon balloon is a real thing, people. And this is true for almost every market. What happens is if you're in a bear market and the market's grinding lower all morning, very often you get a little pop around noon. It's say, well, the sellers went to go get lunch, or the bad traders are at lunch and they're, buying, whatever you want to attribute it to. But it's a real thing, and it can be a tradable thing. So that's something to kind of pay attention to. If you are in a bear market, the noon balloon can be, give you a chance to fade. Because remember, a bear market, what we want to see is strong, powerful openings and weakness that filters through the day, and we finish weekly. That week on the day, that is a true picture of what a bear market is.
that's great advice. I'm just going to throw in a little bit of a fib right now. This is a 30-minute intraday chart. Just see where we're at. A couple things that strike me on this is we're below the session VWAP, suggesting maybe sellers are in charge. Clearly, we have a big red candle. And then we're also approaching that 61.8% retracement. And on the intraday, we get to close below that. That's going to be hard to overcome, but we'll on a 30-minute candle. But we're not close below that 61.8 yet, so we'll keep monitoring it.
Well, let's see. But yeah, I would agree. A break of that with the fact that we got up and we tickled that overhead resistance. We didn't get close, but we got fat magic marker close enough. That's enough to make this market nervous. And since we are in a completely mercurial, news-driven situation, we are one piece of news away from, erupting or collapsing at any given time. It's kind of like trying to trade, during a hurricane. You never know where the next landmine is.
You do not. Well, especially in today's environment with the crazy news cycle going on. But let's move on here. I want to cover some more ground, and we got a lot of these markets to talk about. The one thing I did want to mention to you though is yes, Tesla was totally shadowed by Trump's remarks about Powell and about Trump's remarks about China, which gets me to the 10-year note. This is my favorite market of all time, by the way.
If you're new to trading, this is actually a good market to trade. You know what reports when to step back from. It has great volume. It is considered the smartest of all the markets. So that would also makes it the easiest to learn. I have a friend at the Board of Trade who he and I would be on CNBC sometimes right after each other. And he asked me to start explaining grains to him. And he was a big, smart fixed income guy. And he just looked, he said, "That's way too complicated. Why do you do that?"
Yeah.
But
Yeah, my brother was on the floor of the Board of Trade, and he got to sit right next to Rick Santelli, and he learned more from Rick on 10-year and then the NAB spread and the bonds than anybody. But yeah, it's a great market to trade. I mean, we're right in the middle of this consolidation range, and a lot of people are like, "Oh, well, no one wants to buy U.S. debt anymore. Everyone's abandoning U.S. debt." But prices have been pretty consistent here for the last 8 weeks.
And we've had some pretty good fundamental things to support 10-year prices. Some of that would include better than expected inflation rates, fairly stable economic numbers, nothing over-inflationary or overtly inflationary has really come out. We have some things that have been a little bit of trouble, but we haven't had much trouble. We clearly had our spike where rates came down meaningfully, and then we had our dip when rates obviously went up. But right now we seem to be in a fairly calm state of water. That does not mean the bond vigilantes are not going to show up. If they begin to get uncomfortable, we saw how quickly rates could go up.
Yeah.
By the same token, if we get a risk-off scenario, we could very well see rates come in as long as we get the combination of the dollar higher, bonds higher, S&P meaningfully lower. That is a situation that could push the 10-year higher.
Sterling, we're out of time. I appreciate you being here.
Anytime.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.